At this point, we are on the stage where we have to calculate for the fluctuation capital account, before we can get a balance sheet. So the format for the fluctuation capital account is mostly likely to the partner's current account. So let's quickly dive into it. So there is a difference between the capital account. So this is the capital account, and we have the fluctuation capital account. So the fluctuation capital account. So you underline it very nicely, not like the way I'm doing mine with a ruler. This one is a freehand. So you have to create a space for the two partners, Adam and Baba. So this one also forms the way of the debit side and the credit side. So we have Adam here, and we have Baba here. Adam here, and Baba here. Then you introduce your city sign. The city sign here, particulars. So this is how it's going to be. So at this side, we are going to have the drawing. So we are going to have drawing, interest on drawing. Those are the items that is going to be here. And this side too, you are going to have the capital that was being introduced. You have interest on capital, and also you are going to have salaries, and you are also going to have shared profits. So those are the items that you are going to find under the fluctuation capital account. But sometimes it's not all the items are going to be provided. So you just have to put in here the items that is being provided. That's what you're going to do now. So at this point, drawings were being introduced. So we are going to name it balance brought forward. That was the drawing. So we actually calculated for the total drawing. So if you can see drawings, we have the total drawing for Adam and the total drawing for Baba. So that's what you are going to introduce. So it's the balance brought forward, which is Adam 45,700 and Baba is 30,700. There was no interest on drawing, so this is what you are going to have at the debit side here. And when you come here, the same applies to this point. Balance, the capital side, balance brought forward. The capital that was also introduced, you could see that Adam total capital was 400,000 and Baba is also 300,000. So we are just going to introduce them here. So 400,000 and 300,000. So at the capital side, I said we are going to also have interest on capital. Interest on capital. And in the question, we realized that they were saying that additional information, they were saying that we should calculate 6.5% on the capital balance that was introduced. And so when we were doing the appropriation account too, we realized that the interest on capital was for Adam was 26,000 and Baba was 19,500. So that's what we are going to introduce here. So the interest on capital for Adam was 26,000 and Baba is 19,500. And also salary. salaries. Salaries, we're going to introduce salaries here. So Adam salary, so the same thing. When it comes to the profit or loss appropriation account, we realize that Adam was paid 35,000 Ghana cedis as a salary, and Baba was 45,000 Ghana cedis as a salary. So we are going to also introduce them here. So 35,000 for Adam and 45,000 for Adam. And also shared profits is also going to be shared profits. So shared profits. And when you check the appropriation, what we did was you could see your shared profits. This plus this will give us this one, which is 106,461, and this one also is 96,747. Okay, so we are going to introduce them here. The shared profit is 64. Check it out again. 6461 and 96 and 747. So at this point, these are the items that are going to be introduced in here. So let's find a total for both sides. So the balance carried down is what is going to come as the balance brought down, what are sent into the balance sheet. The balance sheet. So the total of Adam, we are going to have 400,000. 400,000 plus 26,000 plus 35,000 plus 106,461, which we are having 567,461. 567,461. So let's find the difference. So you are subtracting the 45,700 from 567,461 to get as a balance carried down. 45700. So we are having 521,761. Okay, so that is the balance carried down for Adam. So let's also do the Baba. Let's do Baba. So 300,000 plus 19,500 plus 45,000 plus 96,747. We are having 461,247. So let's also find the balance carried down for Baba, subtracting the 30,700, which will give us 430,547. So that gives us the balance carried down. So our balance brought down is going to be the carry down. So Adam 521761 and Baba is 430547. So this is what we are sending it to the balance sheet. This is what we are sending it to the balance sheet as the total capital for Adam and Baba.